It's Mike over at Cross Country Mortgage. It's Monday morning. It's time for Monday morning mortgage update for the week of October the 20th. I hope you all had a good weekend. I always try to give you insight about what's happening in the market. Going to talk about what happened last week, what's going to happen this week, so you can go out there and make some great decisions when you're buying, selling a house, working with those clients that are buying and selling a house. So let's talk about what happened last week. Last week, nothing. I mean, this is really the third week in a row where we've seen very little movement in pricing of interest rates and the actual interest rate itself. So think about an interest rate like a product, right? As a lender, we give you access to that product, that interest rate, like a refrigerator. It's something you're buying, and then there's a cost to that interest rate. So when we look at this graph that I show you here, and this is a trading of mortgage-backed securities in the bond market, I show this to you on a consistent basis. If you watch my Monday updates, whenever we see this green candlesticks, which all these represent one day of trading, when we see this go up and we see more green, that means rates are getting better. Money's flowing into that bond market. When we see the other side, this graph going down, it's a live feed. That's why it just reconnected here. When we see the graph go down, that means money's flowing out of the bond market. And we've got the interest rate itself, and this shows the pricing of that interest rate. So if you're going to get an interest rate of 6.5%, is it going to cost you a point, which is 1% of the loan amount, 2 points, 3 points? And when you're out there shopping for interest rates, lenders are going to charge or not charge discount points or portions of that. Just like if you're going to go to 3 different stores to buy a refrigerator, you're going to find a different price in those. Of course, I'm giving you a very simplistic example of this because when you buy a refrigerator, they don't pull your credit report. They don't sell it to you based on how much money you're putting down. That's not determines the cost. They don't look at all your income, assets, and liabilities like we do in lending. So again, giving you a very simplistic example here. But what you can see in this graph is the government shutdown started October 1st, which is that green bar, and since then it's just been flat. It's been flat since the beginning of September. And what this means is that we've seen money move in and out because you see the red and the green, but overall we really haven't seen much change in interest rates. Yes, they've gone up. Yes, they've gone up gone down. Yes, they've gone down this year, but we're in this flat pattern because with the government shutdown, we're just not getting any data. We're not getting any relevant inflationary news. We're not getting jobless claims. We didn't get jobs numbers at the beginning of October. So the Federal Reserve, which controls economic decisions for our economy, they're not tied to the government shutdown. They're still working. The Treasury's still paying the bills. But all those other departments that these entities rely on to determine what they're going to do, that data is not coming in. So again, another flat week. We're in the 20th day. There's some indication that maybe we'll see a resolution in this government shutdown this week. And there's other people that say it's going to be 30 days, that this is going to go, maybe even longer. So we really don't know. There's just a ton of uncertainty. And when there's a ton of uncertainty, people just don't want to make any sudden movements, especially the bond traders. And that's where mortgage-backed securities are traded in the bond market. So we don't expect any meaningful data. We didn't have any meaningful data last week, and we don't expect any meaningful data this week, except one thing. We'll talk about that. So let's talk about the 3 things that we're going to see this week. Inflation, some geopolitical stuff, and then a Treasury dump where the Treasury Department that pays our bills, they're going to sell a 20-year Treasury bond. So inflation. This is the biggest driver of interest rates. We know that inflation is the death of mortgage rates when inflation goes up. And we are getting a CPI report on Friday. And so there's really nothing happening until Friday when we get that CPI report. We expect CPI to go up. Apparently, the people that put this CPI report together have some type of emergency funding that allowed them to come in and work this week so that they can put some type of a report out on Friday, which is ahead of the Fed meeting next week, the Federal Reserve's meeting next week. So we're not going to hear from any of the Fed members talking about their opinion. It's a blackout every time the Fed meeting happens the week before. The Fed members can't talk. So really interesting. Really, we're going to be expected to be flat this week until Friday when that CPI report comes out. But that CPI report, because it's one of the only reports that are coming out, is really going to be impactful on what the Fed decides to do next week. Now, everybody expects the Fed to cut rates again next week, but how much? Eighth of a point, quarter of a point, maybe more, maybe less. And if inflation comes in above expectations, you would say that the Fed should not cut interest rates because inflation, the reason the Fed's been raising rates is to fight inflation. So how can they cut rates if inflation's up? Well, we also have weaker jobs numbers that we've seen in the past. We didn't get them in October. So it's just a real interesting situation that the Fed's being put in next week. But again, a lot of people think they're going to cut rates because of the reports that came out prior to the government shutdown. Next thing is geopolitical. Again, we're 20 days into this government shutdown. If we see some resolution, if we see a settle, the government figure it out, the Democrats and Republicans say, okay, here it is. I think they've had 11 votes and they can't agree to anything. They're all posturing. Maybe we'll see some movement, some better movement in the market. And then China and U.S. are meeting this week. That's another geopolitical thing. So what are they going to decide on tariffs, et cetera? And then a treasury dump. So the treasury sells bonds. It's a 20-year bond. Is there going to be some appetite in that? If people buy this bond, that's going to be money flowing into the bond market. That could be an improvement for rates. But again, generally, we don't expect anything to happen this week. It's going to be another flat week. So if you have any questions about your interest rates, if you're looking at buying or selling, and you need any help, any guidance, second opinion, don't hesitate to give me a call. I've been in this over 25 years. This is my specialty. If you know somebody could benefit from this video, somebody who's buying a house, somebody who is just concerned about the advice that they're getting, go ahead, forward this video to them. They can subscribe, and I'll send it to them out every week. And have a great, productive week. Let's see if we get some news that moves the market, and we'll talk to you next week. Bye-bye.